Hello and welcome to the Weekly Forex Outlook at xm.com. Next week, traders will keep their eyes on the Fed decision and US CPI data for clues to the dollar's path. In addition, we'll hear from the Bank of Japan and we'll get UK data that might be important for the pound. I'm Maria Pachordes, and joining me to discuss all this is Senior Investment Analyst Haralambos Pissouros. So Haralambos, starting in the US, on Wednesday we'll get the CPI data for May, just a few hours before the Fed decision. Now, inflation has been on a downtrend since April, and in May we got some disappointing ISM manufacturing PMI data. So what are we expecting to hear from Fed officials this time, and what reaction might we see in the dollar?
Hello, Maria. Yes, indeed, inflation resumed its downtrend in April, which combined with other disappointing data like the ISM PMI you mentioned, prompted investors to increase their rate cut bets, assigning an 80% chance for a first 25 basis points cut in September, and also expecting another one by December. So, this makes Wednesday's Fed meeting very special, especially because we get new updated economic projections and a new dot plot. Now, with most policymakers already signaling that they are in no rush to start lowering interest rates, there is a possibility for an upward revision in the interest rate projections. However, a median dot pointing to 2 rate cuts this year may not be enough to lift the dollar, as this is what the market is already anticipating. In my opinion, for the dollar to stage a strong recovery, the majority of Fed officials may need to signal only one 25 basis points reduction for 2024. Now, as for the CPIs, the S&P Global PMIs for May revealed some acceleration in both input and output prices. So, a set of sticky numbers for May could allow the dollar bulls to start the party earlier, even if the Fed decision does not meet their expectations. After all, market participants will be aware that the CPI numbers will not be incorporated into policymakers' projections. In any case, Fed Chair Powell may receive a couple of questions about the data at the press conference.
Moving over to Japan now, we'll hear from the Bank of Japan on Friday. Back in April, the bank kept its policy rate unchanged. What do you think Japanese policymakers will signal this time? And how might the yen be affected?
Last time, the Bank of Japan did not only keep interest rates unchanged, but also they upgraded their inflation projections. However, the bank did not signal a reduction of its bond purchases and refrained from signaling a strong intention to raise interest rates again soon. So, this resulted in a weakening yen, despite the upgraded inflation projections, and also to intervention episodes by Japanese authorities in the following days. In any case, the currency resumed its slide soon after the intervention episodes, with a larger than expected economic contraction for the first quarter, putting obstacles in the road for the next rate hike by the Bank of Japan. Investors are still assigning a strong 67% probability for another 10 basis points hike in July, but should the bank avoid communicating that intention clearly, traders may get disappointed again, and the yen could extend its slide and perhaps retest its recent lows at around 160 against the US dollar.
Turning to the UK now, we'll get the UK jobs report and the monthly GDP rate, both for April, on Tuesday and Wednesday respectively. Is this data likely to impact the pound?
Here, the hotter than expected UK inflation numbers for April prompted investors to scale back their Bank of England rate cut bets. Currently, they are pricing in around 40 basis points worth of rate cuts by December, with a probability of a first reduction in September resting at around 65%. So, another month of elevated wage growth and a GDP figure corroborating the view that the UK economy entered the second quarter on a solid footing may lessen the probability for a September rate cut, and this could thereby help the pound trade higher.
And finally, is there any other data coming out next week that traders should look out for?
Yes, we do get China CPI and PPI numbers on Wednesday and Australia's employment report on Thursday. Also, it is worth mentioning that this Sunday is the last day of the EU parliamentary elections. Although the outcome may not be a game changer for financial markets, a surge in right-wing support could make it more difficult for lawmakers to agree and push through reforms and policies that give the European Union more power. So this could weigh somewhat on the euro.
Harlambos, thanks so much. This was the Weekly Forex Outlook here at XM.com.